we are looking at gains for the week in oil. It's been a bit of a roller coaster ride ever since that OPEC Plus announcement came through, and then I think they tried to dial back what that announcement actually was. But ultimately, the path the last few weeks has been bullish. Do you expect that to continue?
Well, good morning. Oil took a significant upturn from the recent lows which we saw. But again, most of it is driven by geopolitics and OPEC Plus communication, right? OPEC Plus had to reassure market that the barrels they're going to bring back to market is subject to market conditions. On top of that, if you look at the geopolitics recently, the fresh attacks, drone attacks by Ukraine on Russian infrastructure, that's actually helping oil prices in the near term. We are also seeing Israel and Hezbollah tension flaring up as well, and that's supporting oil prices as well. Having said that, if you look beyond summer demand, if you look at beyond geopolitics, I think the fundamental factors are still kind of balanced or bearish in our view. We maintain our view that oil prices could go back as low as $70 to $75 per barrel on average in the second half of this year. And the factors which you mentioned have remained the same. We are talking about spare capacity at OPEC Plus. We're talking about non-OPEC suppliers. We're talking about demand softening in global economy. And inventory picture is not that optimistic either, right? So on one side, there's geopolitics. On the other side, there are fundamentals. I think prices are going to stay volatile through the rest of the year. But we think if you go towards end of the year, there's still a risk that prices could go lower than where they are at right now.
And what does that mean for the economies of the region? Because, it's one thing for Saudi Arabia to be withholding barrels when oil is trading at $85. It's quite another thing if they're withholding barrels when it's trading at 70. So what implications is that going to have on the real economy?
As far as Saudi Arabia economy is concerned, they really need higher oil prices and higher production, right? That's not happening. And we saw that in the first quarter GDP number as well. It's contracting. Having said that, there are many levers to Saudi economy than just oil, right? Non-oil economy is resilient. We are seeing mid-single digit growth there. If you look at Saudi balance sheet as whole, it's one of the strongest in the region. I mean, debt to GDP is still less than 30%. Interest cost as a percentage of revenue is just 3%. So we're really talking about robust economy on the whole, and that would mean they'd be able to cope up with this kind of weakness this year, if not beyond.
Yeah. Amol, I'm not sure if you saw, but Bloomberg's story yesterday saying that Saudi Arabia has overtaken China as EM's largest issuer this year. I think that would have gone very undetected by many in the world. A bit of a surprise to the people who don't trade the ins and outs of Saudi as much as you do. What do you expect the funding situation for Saudi Arabia to look like, not just for the remainder of this year, but in coming years as well, given how much they have been issuing in bond space?
It's a great question, Ramon, and I think that's the risk which investors are talking about at this point in time, supply risk out of Saudi Arabia. I think markets are overly concerned with respect to this issue in our view. If you look at the deficit numbers by many economists this year, they're talking about 4 to 4.5% of deficits for Saudi economy, and that just totals about $45 to $50 billion. If you combine the debt market and equity market issuance as a whole, that's about $45 billion already. So I think in our view, the economy is well funded for this year. And I think the worry about supply risk, though it's valid over the longer term, I think in the near term, I think they should be all right. And I just talked about the fundamental factors, right? I think if you look at the net foreign asset of Saudi Arabia, they're about 50% of GDP, and that's one of the highest numbers you can see for any emerging market single A or double A rated economy. And you got to also look at the relative valuations and spreads, right, of Saudi Arabian bonds versus similar rated EM bonds. And I think we see a great opportunity in Saudi sovereign bond curve at this point in time. It's one of the cheapest single A issuer out there. You can compare it with names like Chile, Malaysia, Poland. It's just giving you 40 to 50 basis point more for similar rated and similar maturity bonds. Just to bring into attention the relative valuation versus Indonesia, which is a 4-notch lower rated economy. Saudi Arabian bonds at the long end are giving 40 basis point more for 4-notch better rating. And I think the supply risks are clearly factored in the curve in our view.
Yeah, so I know you're a fixed income investor, but how closely were you watching the placement of the Aramco secondary offering? And to what extent were you interested to see that, in the end, 60% of the demand that came through was from foreigners?
It was not a surprise to us, as I talked about the deficit number, right? If you're talking about 4.5% of deficit, we're talking about $45 to $50 billion in absolute number. And the report which you guys published yesterday, we're talking about $33 billion of bond market issuance. Aramco printed about $12 billion in equity offerings, right? That adds up about 45. We know that the FTA picture in Saudi Arabia is not that great yet, right? Over the last 3 years, average annual FTA is about $15 to $20 billion. They want to take it up to $100 billion a year at some point in the next 10 years. It's a very ambitious task. Yeah. But then we can see that changing gradually. But until that happens, I think government will have to, issue through debt market. They have to go through Aramco secondary offerings to fund that gap. Yeah. So I think if you look at the math, it's understandable. But then we're not concerned as such, as far as bond market is concerned in Saudi Arabia.
Yeah.